Have you ever heard the expression, heavy is the head that wears the crown? Well, it was one stock that's been wearing that crown for about 3 or 4 years, and that's Nvidia. And Nvidia just came out with some crazy earnings that just showed you guys, A, how important it is, 2, how big of a king it is, and 3, if you don't have Nvidia in your portfolio, how much money you're losing. But that doesn't stop the whole story, because the whole theme is AI and space. So we're going to go over the stocks of the week. The good stock, hint, is Nvidia. The bad stock, hint, might be an opportunity. And then also the opportunity of the week. Now, this opportunity gives you a rare inflection of the future and also something at a discount. You see, typically when we invest, we want to look in the future because past performance doesn't guarantee future results. Future trends is always what we want to look for to grow. That's A. B, in a trending sector that is doing nothing but going up. But then C, why is this stock down some more? This, my friends, might be the opportunity of your lifetime. We're going to go over that as well. Before we get started, as always, like, subscribe, and share to our channel. Let's get this to 1,000 views. I just hit 100,000 followers here on YouTube, so thank you so much. In the real life, I'm a certified financial planner, but on these social media airways, we'll give you information. This information is going to transform your wealth forever. You guys ready? Let go.
And you just want to get paid. Tired of making no money mistakes. Make a payment on your bills and you still late. Yeah, painful profits to help you seek change. And you just wanna get paid. Yeah, tired of making no money mistakes. Make a payment on your bills and you still late. Painful profits to help you seek change. Yeah, cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Been check to check, you knowing it could be different.
It's a person who braids our daughter's hair, and she has a son. He's about 3, maybe 4 years old. And each time I see him, I say, when you walk into the house, you got to announce yourself because his name is King. So he walks into a house, he says, "The king is here." And that's exactly what happened with Nvidia. Nvidia did not only stamp themselves as the king of the stock market, but they cemented themselves with the earnings that they had the other day. You see, their demand for GPUs tied to AI, tied to data centers, remains extremely strong. You need Nvidia literally to grow your business. You need Nvidia to decrease resources. You need Nvidia in all shapes and sizes in life from a tech standpoint, so they're not going anywhere. And from a long-term standpoint, it's only going to get better because we have what you call hyperscalers. Now, you probably heard this word a lot, but don't know what that means. Hyperscalers are like the Magnificent Seven, the companies that are spending a lot of money, that are scaling very quickly. They have the most money, so they put in the most money from an investment standpoint. We see Amazon putting up $600 billion for AI. That's hyperscaling. We see Microsoft did $400 billion pledge this year for AI. That's hyperscaling. And all these hyperscalers are going to Nvidia. So you think Nvidia stock is going to go up or go down? They now are the first $5 trillion company. By the end of the year, they might get to $7 trillion. Now imagine, it has hit $1 trillion a year ago. They went from 1 trillion to 5 trillion. We're talking about trillions, not billions, not millions. This time next year, they might be at 10, maybe even $15 trillion. And because of the positive reports, them beating earnings, them making more per share than what people thought, them having more orders. So even though it's a backlog, they can't ship out chips as much as people want the chips. People are still ordering. That's not going to stop, my friends, and that's why they're the stock of the week. Is it just me, or is that you're working hard, but you're not seeing the financial results that you want? We're clocking in, we're clocking out, we have the income, we're making the money, but our wealth is not growing like we want it to. Well, my friends, it's not your fault. You know why? Because we're never taught how money works. We're taught how to spend it, but we're not taught how to leverage the money that we're making right now to build wealth. Now, wealth, it comes in all different shapes and sizes. The question is, how much wealth do you want for you and your family? But the best part about it is help us on the way. Join us during our 5-day mentorship, where you learn how to structure your money, reduce your tax liability, increase your net worth, and build wealth. We'll show you how to go from a wealth builder to a wealth strategist to a wealth creator and leaving that long-lasting legacy to your family. Click the link below and join us on our 5-day mentorship. We will help you accelerate your wealth. Now back to the episode. And look, the chart says even a better story. For the year, up 16%. Now, you remember earlier this year when people thought, AMD, no shade, TSM, no shade, all the other companies were kind of, bringing them down, and they were down to $165 a share. I got on here and said how Nvidia might be the stock of the week. And I said this back in March because it was down at a discount, but up from a sales and infrastructure standpoint. And since then, 165, now all the way up to 235. You want to talk about some growth, my friends? That's a 20% gain in 2 months. And back down again. So this week, even though it had great earnings, even though it blew everything out the water, they made more money than what people thought. They got more consumers than what people thought. And they are the largest company in the world. The stock still went down by over 4%. My friends, we talk about this strategy all the time. The cliff dip bear strategy. And if we applied that just in Nvidia alone this year, we would not be up by 16.5%. We'd be up by over 25% this year in Nvidia. What's the cliff dip bear strategy? Well, the cliff dip bear strategy is that if you have $100, we put $25 in that stock because we don't know if it's going to go up or go down. Here's the kicker. The next $25, like here, right, on January 29th, we invest in that company when it's down by 5%. So when Nvidia was at 215, when Nvidia was at basically 200, when it went down to 180, we invest another 25%. And yeah, kicking back up, got back up to 185. But here we go, my friends. 185 down, right? 72. When the stock goes down by 10%, we invest the other $25. And then boom, from its high, it went down another 10%. So now it's down by 20%. When that stock is down by 20%, we invest the other 25% that's left. So for $100, $5 up top, $5 when it's down by 5%, $5 when it's down by 10, and $5 when it's down by 20. So when it goes back up, since you bought it at a discount, you make more. Being up by 16% is great because you're beating the market. Would you like to be up by 25% in this stock? You would have that right now by using the cliff dip bear strategy. Now, Nvidia is giving us an opportunity because it's down this week by 4.5%. Bad news happens over the weekend. Monday comes along, market's closed, Memorial Day. Tuesday, market's down. This could easily be down by 5%. And my friends, you want to invest in this. Not a recommendation, just information. But the stock of the week, the king is here, is Nvidia. Now, just like a movie, it's a good story, but it's also a bad story. Just like the market, we have a lot of great stories right now. Not good stories, great stories. But we also have a bad story as well. A lot of bad stories, actually. Because even though the market's up, all the stocks are not going up. Some stocks are going down, and some stocks are going down, down, and down. And our bad stock of the week is Walmart. Now, am I saying that Walmart's going to go out of business? No. Am I saying that Walmart's going to continue to underperform the stock market? I don't know. But what I am saying is that Walmart right now is losing its competitive edge. And their edge is a long pause edge because they have automations, systems, client loyalty, great prices, and Costco's to their advantage. So this is not saying you need to sell all of your Walmart. But for people that want to kind of trim some things off the top, who have been in Walmart for a very long time, you might want to look at repositioning. And this is why. Because when their earnings came out, not so good. Weaker than expected, meaning people thought that people would spend more money at Walmart, buy their goods and services more. It just didn't happen. And Wall Street punished them for that. When you have a large company, a very, very large company like Walmart, and you expect things to be stable because it is the large of a large cap, right? So they're pretty stable. When they make money, but they don't usually blow it out the water. When they lose money, it's not expected because they have a loyal client base. Where are you going to go? You're going to go to Dollar Tree? Maybe. You're going to go to Dollar General? Maybe. You typically go to Walmart because Walmart is that intersection of service at a discounted price. Are you like the 83% of Americans who want to get a trust, who want to get a will, want to get a power of attorney, but you don't have one? Well, you are not alone because 22% of Americans have one. That means 1 out of every 4 families have a trust, a will, and a power of attorney. Which bracket are you in? 1 out of 4, or 3 out of 4. It's okay because we have the Relax Estate, a fully automated AI platform that allows you to create a trust, a will, and a power of attorney all at the fingertips. And if you are an insurance agent, tax professional, financial advisor, notary, or in any business profession, you can even white label this to your clients. You grow your business, you help your clients, everybody wins. Visit our website, www.therelaxestate.com. Right here, therelaxestate.com, and you can create a trust for your family, or if you're a business owner, want to use it to scale your business and help your clients, you can do that as well. Now back to this wonderful episode. Now, all Walmarts are not created equal. Some Walmarts, trash. And some people think Walmart might be the next Kmart. For my older folks out there, my 40s and above, y'all remember Kmart. I don't think Walmart is nowhere near Kmart. I think Walmart is going to recover. But the question is, when? And it might be other investments that are doing better. So look at the chart. Last 5 days, okay, doing what it's supposed to do. And then, boop, earnings came out. And look at that. Try to start to recover, and again, right? So down by almost 10% the past 5 days. For a long-term investor, the cliff dip bear strategy, right? We're able to put about 50% of our money into Walmart. Now, if it goes down on Tuesday at the opening, 75% of our money. And if it goes down by 20%, your money that's allocated to Walmart might not be a bad idea. We definitely believe Walmart's going to continue to go up. Past 5 years, this has happened, right? Went from $51 to $40. It happened, right? Went from $102 to $85, right? It happened, right? So this happens. But with a company that's really don't have a lot of fluctuations, is a steady piece of growth, you have a downturn like they're having now, investment opportunity, because it rarely happens. Did you know the average stock goes down by 20% every 15 months? Walmart has not suffered a 20% drop since COVID. Even during the 2021-2022 fiasco, didn't go down by 20%. Even during the tariffs, didn't go down by 20%. Stable. Now, past performance doesn't guarantee future results, but Walmart is a stable company that over time, historically goes up. So yes, it's the bad stock of the week, but for a person who's more conservative from an investment standpoint, or more moderate, or is okay with ups and downs, will kind of want a nice upswing, historically speaking, Walmart might be something to look at. Now we have an opportunity. What's the definition of an opportunity? Well, opportunity is something that you can take advantage of that's going to have a greater return down the road that you do not fathom. Because we all think the market's going to go up over time. It does. But the opportunity of outperforming the market is better. It's that risk-reward ratio that we talked about the other day. And from an opportunity standpoint, it might not be a better opportunity than Lumentum, symbol LITE, LITE. The stock, light right now over the past few days, not over the past year. But what's not light is the sector, because it's been one of the strongest AI momentum plays for the year. One of the strongest, up over 145% for the year. It takes the stocks dang near 20 years to get to that. They did it in 5 months. AI infrastructure isn't going anywhere. You see, we really can't pick the winners and losers of AI because it's so much AI. And some companies are going to do better than others. But we all need the infrastructure. Like cars. We don't know what's going to be the best car company in the next 5 years. Is it Tesla? Is it Ford? Is it Toyota? Is it GM? But we all know they're going to be driving on the same road. So from an infrastructure standpoint, we have invested in the road for the stoplights that get them from A to B. Right? The gold rush. When everybody went to San Francisco, some people found gold, some people did not, but they all needed picks and shovels. And those companies, Levi's, the Levi's jeans company, they made the most money. And from a probability standpoint, probability of you making money with those companies were a lot larger. And so when you think about AI infrastructure, some chip companies are going to go great. Some chip companies are going to phase out and be bought. Some large language model companies are going to go great, and some is going to go down like crazy. Join us in our school community as we have modules, classes, courses to go from a taxpayer to a wealth builder. How to use our cliff, dip, bear strategy to do better with your investments. How to acquire businesses and how to use your retirement plan to grow and not pay taxes. What? I can have a retirement plan grow and not pay taxes? Yes, your IRA or even your 401k at your employer. This and other things we focus on in our school community, the Relax Investor. And guess what? You get 7 days, free access, and you get our weekly coaching calls every Wednesday. You and hundreds of people ask questions to 6, 7, 8, and even 9-figure business owners that tell you how they created their business, how they run their business, and how their finances is as smooth as it can be. So click the link below and join us in our Relaxed Investor Academy to help you scale your finances. But the infrastructure needed to build it, it's not going to go away. And LITE gives you that infrastructure play. And for the year, as we can see, look at that. Look at that. Crazy. Great opportunity going from 783 to 558. Did the cliff dip bear strategy right there. Oof, man, right? So it does give us opportunities as high as $1,000 a share, now at $9.49. So the growth, crazy, hyperbolic. And I'm not here saying it's going to make another $149,000 over the next 5 months. I'm not saying that. What I'm saying is, wise, it went down from 1,000 down to 866, and now it's trudging back up again. Going from 964 back to 1,053, that's almost 10%. That might happen in a day or two. Not about trading or swing trading, because long-term investing is the wave. But from an opportunity standpoint, short term, you're able to be in something that we know has the momentum, and it does not look like the momentum stopping. Past year, even better, even better. Would you imagine this time last year being in this at $78 a share? And now it's at 947. Could you imagine that from a growth standpoint? Look at this. Hyperbolic, you guys. Last month, 13%. Slowing down? Really? Not really. Not slowing down at all. 13%, still 160% a year. Last 5 days, damn. Look at that. Boop. Pop back up. And we still have time to get back to where we were, right? But it is creeping back up. So an infrastructure play is always the best from an investment standpoint, in my humble opinion. But being infrastructure inside the fastest growing sector we've ever seen, that's an advantage. Being able to buy something when its momentum was going up as it went down, and now it's starting to trend back up, that's an advantage. And also having those picks and shovels when everybody else is mining for gold, that's the play. So I'm not saying YOLO. Don't put all your money in this. Be strategic if you invest in LITE, but do your research. And if it's a fit for you, your risk tolerance, your portfolio, your allocation, LITE is the opportunity of a week. Well, you guys, comment below. Am I missing out anything? Is there any stocks I missed out on that could have been better than what I've mentioned with the best, the worst, and the opportunity? What do y'all feel about Walmart? Is it going to go back up? What do y'all feel about Nvidia? Is it the king or somebody else going to take their crown? And what do you think about LITE? Is it too high because it grew too quick? Let me know in the comments. As always, like, subscribe, and share. Have over 100,000 followers on YouTube. I couldn't do it without you guys, and I truly, from the bottom of my heart, just want to say thank you. You guys be blessed, and as always, let's make some painful profits together, y'all. Peace.